Online recruitment activity in the UAE rose in October, with annual job growth standing at 7% according to the Monster Employment Index. The monthly index showed that the retail and logistics sector lead the top of the charts in terms of year-on-year employment growth, while the education sector and the oil industry also hit the top of the index. Lowest growth for the period was in the finance and accounting industry, human resources, software and telecoms. Leading the Middle Eastern region, Saudi Arabia hired 49% more people in the past year, according to the index. And in another report, the UAE's gross domestic product is expected to rise by nearly 4% this year. That's according to the Saudi American Bank Group. It stated that the growth forecast is due to a rise in crude prices and a jump in oil and gas production. The International Monetary Fund earlier projected the UAE economy to rise by 3.5% this year. Shares in the UAE and the entire GCC are down again today. Here's a quick overview. The U.S. economy expanded less than previously estimated in the third quarter. We spoke with Dauba-Pantanacce, senior economist at Standard Chartered Bank, and asked him what his growth forecast is for the fourth quarter, how the debt issue in the U.S. will continue, and what would happen should rating agency Fitch downgrade the U.S.
Yes, indeed. The figures that we saw coming out of the U.S. yesterday were definitely more worrying than what we could expect. And we actually are very concerned by the very low wage growth, but also the unemployment figures who doesn't show any sign of very strong revival. I think that the only comfort that we can see is from the fact that firings have eased a little bit. We actually think that the last quarter of the year, Q4, should be more positive for the U.S. and we should see a rebound at 2.4% annualized growth for the U.S. in the last quarter. In terms of the debt and the downgrading, I think that what we saw this summer with the S&P downgrading of the U.S. is the fact that it is not really a game changer for the U.S. for one simple reason, is that there is no substitute for the U.S. T-bills and generally the U.S. government debt, because it is the most liquid and the most, I would say, deep market in the world. So there would be any other alternative for investors.